Stock market, we're going to do a 1 to 3 month view as we look at the SPY. So our analysis has said that starting sometime late June through July, we expected a market peak, and that the market was likely to decline through starting sometime in July and in through part of August. So we've seen corrections in the stock market, but really under the market. And the major indexes, which had a brief, fast decline of 3.6%, now rebounded very quickly and are at all-time highs again. At the same time, as I talked about in the beginning of the show, a lot of the other indexes fell much harder and have not had anywhere near the rebounds that we're seeing right now. The indexes are really very affected by the mega caps, which we believe will be correcting in August. So this is really kind of a rolling correction that's going on, and doesn't look like it's going to be anywhere near as deep as we originally thought, which was declines of 11 to 13% into August. Now it looks a bit different than that. We're going to take a look at that as we look at the charts in here. And I'm going to remove that, and now we're going to look at the SPY, SPY. So we're looking at cycle analysis in here. Cycle analysis, for the people that are new, looks at the rhythms in the market, the money flow in the market. And there are repeating patterns that are very visible when you look at all markets, and all of the repeating patterns are unique to those symbols. You can learn about that by going to our website, to the workshop tab, and look at the cycle analysis workshop. We have a lot of information there, and a video you can look at and tell you a lot about our workshop. So what we're looking at right now are the rhythms in the market. I'm going to expand this out a little bit so you can see that the lengths of the cyclical patterns in here. These yellow ovals are corrective periods. When the corrective periods come, or when there are two cycles that are coming down in here, is when you get the biggest risk on the downside. The advances recently, and going back here through this entire year, have come after pretty long upside moves. This was 19 weeks from the last low. This was 24 weeks to that peak. This was 21 weeks to that peak. And right now we're at 20 weeks right over there from that low to that peak. So the cycle rhythms in here have been basically 27 weeks to the bottom, 23 weeks to the bottom, right over there. This was 24 weeks to the bottom. So you can see the repeating cycle lengths that are in here. I also want to look at something a little bit different that I haven't showed you before, and that is this kind of a repeating pattern that is coming in here as the market moves up to a high. What happened was, in this cycle right over here, before the correction, it had a pretty sizable dip here for about a week or week and a half, and then had one big upside bar here, made a high in the next week, and then the pandemic hit right over there. Here you can see the same thing. You had a pretty good downside week right over here, and both of these came down to that 13-week moving average, as you can see right there. Right over here, and then it came back and made one more new high, and then 21st week peak, and then came down. So this was 5.8 to 7% on the downside right there. This one was 10.8% here. Of course, this was the pandemic, which was 35%, and that same pattern is coming into play right now. So this right over here, the 20th week, it's kind of hidden in there. Let me just bring that right over here. You had this decline right over here. This was only 3.6% to that decline, and now you're coming up here and making a new high. If it follows the same kind of a pattern, you probably have another week to the upside attempt in here. But then we get into this period in August where it's likely to have a decline. You'll note in here it was about 2.5 weeks where it fell this 5.8 to 7%. And we are now looking at, basically upgrading this, because we had thought it would be 11%. But now with this stronger pattern in here, It's really likely that it won't be, and that the decline will be much more into this 5.3 to 7.7% where these supports are right in here. And you'll note that we have now added in an intermediate support buy zone right over here. The mega caps, they all align to a pullback in August. And that is, very much in line with the corrective period that we see right in here. But again, it's not likely to be as steep as we originally thought. And then after that, we get into the next rising phase right over here. So our 1 to 3 month view is that we'll probably get another little bit more on the upside right in here. There's a potential for it to get up to that 445 number right there. It's about another 60 points in the S&P 500. And then we get into this period in here where it's likely to give you what we think now is going to be that 5.3 to 7.7% correction right in here. So that is an upgrade. We're always going to do what the market tells us, and you can see in here the momentum is strong. During this correction right over here, the momentum did not ever turn negative, and that shows you what we call a swamped condition, where the upward component is so strong it doesn't really let the market correct very much, and this doesn't really get negative at any point. That happens in very, very strong market conditions, and we're still in that kind of a condition right now. If you look back at this one right over here, you can see that the momentum turned negative here for a brief period of time, but then turned positive again. That was around the election, and here it turned negative, and it stayed negative through the big pandemic decline. So very clearly what we're seeing in here is a lot of strength coming in, and that there's a pretty good likelihood that August brings you a further decline, that this was just a warning like we had over in this time period over here, and that the correction gets below those levels that we have been at, and probably down over 5.3%, which is not very big, maybe as much as 7.7%, and then get into this positive period. So this area right over here, where we get those declines and those mega caps fall, Amazon, Apple, Google, Microsoft, they all look like they're going to decline into that time period. Netflix, Tesla already quite weak and heading down into that time frame also. So that's what we think. But then that becomes a buy opportunity for this next period over here. We had thought that the bull market peak would be in the first half of the year, but the market is now telling us differently, and that more likely that the bull market peak and the high for the year comes out over here into October. That is a look at the 1 to 3 month view for the S&P 500.